What's going on, guys? Thank you for tuning into this episode of Twin Finance. My name is Dylan, and today we're going to be talking about the last 3 months of positivity that we have seen in the stock market. And this has really been quite absurd, guys, in my opinion. And I'm going to tell you why I think this is not super bad for the market, but I think it's unhealthy. And we'll get to that in a second. But as you guys know, the market hit its peak around October 3rd of 2018. And so, I mean, it was doing, like, this isn't going to be quite accurate of a sketch, but, you know, October 3rd came around, and that was the peak. And particularly, guys, you know, make that look more drastic first, because, like, these moves have been pretty big. So let's just say, you know, the market hit its peak October 3rd, and then it fell 16%, and it was kind of, you know, it didn't go straight down. It didn't go straight down like that, but, you know, it kind of tumbled down, and then it kind of ended up like that, right, guys? And right around is December 24th, on the day it hit its low. That was right before Christmas. December was an awful month. This was a 16% drop right here, so we're looking at down. This is 16% right there. And now we're looking at the market's about to break this high, guys, right now. That's crazy. So we're looking at the market came back since December. We're looking at, and honestly, the move looks literally like straight line. There was this tiny little one at the bottom, and then it's right back up, and it's almost even with where it was. And this is February 22nd, guys. 21%, so this is a 21% gain right here, plus 21%. And as you know, if you fall a percent, you're gonna need to gain more percents to get back up. So just to, you know, make that clear for you guys, but this is unfathomable right here, like how positive the market has been. All it's done since in the last 3 months is literally go up. And, you know, positivity is never a bad thing if there's a ton of reason to back it. The reason why I think this positivity is unhealthy is there hasn't been a whole lot of reason to back it. I mean, yeah, the trade talks are saying you're going to cool down. The tariffs might not be as bad as expected. And, you know, the Fed said, you know, we're going to not halt interest rates, but going forward, but they said they're not expected to raise them as much as they thought. So I mean, that is positivity to back it, but interest rates still went up and tariffs are still going to be put in place. So, I mean, a few months ago, people were scared shitless of that, right, guys? Like, everyone was getting out of the market. Oh, interest rates are going up, bonds are more attractive, let's get into those. You know, oh, tariffs, it's going to crash the global economy, let's get out of it before, you know, it crashes. And then, like, has everyone forgotten about that? Or, like, I don't know what happened, guys. So, I mean, the last 3 months, it seems like people are forgetting, and typically when people forget, they're investing based on emotions and, you know, not on like actual thoughts and whatnot. So they're going with the trends of the market. And this plus 21%, like I said, that would be a massive move in a year's time, let alone 3 months span. So I think when we're seeing back-to-back big moves like that, and then obviously last year at the beginning of the year in February, there was a big drop too. So I mean, if you're looking at the 1 or 2 year chart, the market has been pretty crazy for the last, you know, year and 4 months, year and 3 months. So I think, guys, another big jump like this is not healthy. If you look around, you know, Apple cut its guidance for 2019 a bit. There's, you know, consumer goods companies that are cutting their guidance too because of tariffs and whatnot. And there's a lot of retail stocks also, like Sinai Jewelers and other companies out there that are also going to cut their guidance due to tariffs and whatnot, going forward in 2019. So I don't think that if companies are posting below average earnings, this positivity is going to be able to sustain itself. And the reason why I think another reason why I think it's unhealthy is it's a really massive move. And I think if any little bit of negativity can seep in here, even if it keeps going, sets new highs, which is probably going to, I think people are just going to way overreact. And the market, especially if the trade talks go south, guys, I think the markets will just tank based off. This is a very positive move, and if a very negative, you know, big thing comes out, I think he's gonna wipe that right out, guys. So I think that's just unhealthy. I think if we just saw, you know, some bottoming out and, you know, some fluctuations and whatnot, a little bit more stability. But in my eyes, guys, there's no stability right here in the market, and I think that, you know, like I said in my last video. There's really 2 things that I think that could crash the market in 2019. Other than that, if these 2 things don't happen, I don't think the markets are going to crash. You may start to enter another bear market, but I don't think we'll see a crash. Is the trade talks in the Feds with the interest rates. So we'll see how that goes, guys. I know March is going to be a really big month for the stock market with the news coming out and whatnot. So that's just my general opinion, guys. Let me know what you think below. If you think this positivity is sustainable, let me know and tell me why. Love to hear from you. Also, if you enjoyed the video, guys, drop a thumbs up and remember to subscribe. Take care, guys. Have a great day.